Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on trading with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the chart. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, let's first look at the structure. Now, from a structure standpoint, what we can notice is that we have a market which at the moment has broken to the upside, retested, and is currently rejecting this quite strong level of previous monthly resistance here, from which all this move to the downside was created, which has now turned support at this level. Now, as the market is testing this previous resistance turn support, we could expect more bullish continuation to be created away from this area. So on the monthly, everything looks quite bullish. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, the structure can be identified also here on the weekly time frame, being this previous weekly high from which all this move to the downside was created, which has now turned support here. When it comes to the pattern that the market has been creating so far, we can easily notice how we had a strong impulse followed by this correction. And in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. And what we can see here is that we had a perfect 0.32 Fibonacci retracement lining up exactly with this previous structure resistance now turned support, which essentially creates confluence of support at this area because we had both the 0.32 and this previous resistance turned support both lining up exactly in the same area of price, which creates confluence of support, which in fact the market has already tested and is currently rejecting to the upside. Now, there's a very high probability that inside of a confluence of support area, we have got an institutional longing happening inside of this zone here. And that is something that we will be covering later on during the video when we go and see actually how institutions are moving their orders. Now, if we drop down on the daily time frame, what do we see? Well, from a daily perspective, I did speak about gold quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this move to the upside. Then again, I explained all the reasons for which we could expect first this correction and then the continuation to the upside. Again, from here, I made a full breakdown explaining all the reasons for which we could expect this correction and then the creation of a daily higher high. And again, after the creation of this M pattern here, I explained all the reasons for which we could expect this move to the upside. And again, just a few days ago when the market was at this level, I explained all the reasons for which we could expect first this retest and then from here, the creation of a new daily higher high, which again, is exactly what the market gave us. And by the way, I will link in description all these previous analyses so you can go and check them out for more free education. Now, from a daily standpoint, before we continue with our analysis to see how the structure has changed, let's first go and see what we have when it comes to the commitment of traders, so the COT data, so essentially how institutions are moving their orders. Now, what we can see here is that with the last reports, net positions have been massively increased. We went from having 71.4k net positions all the way up to having 155.3k net positions, with a huge increase of the longs from 220k to 254k, and shorts got decreased massively from 148k down to 98.9k. So at the moment, institutions are positioned with 254k longs compared to only 98k shorts, showing a clear move to the bullish side for gold when it comes to the institutional side of the market. Now, this is obviously quite bullish for gold, and we could expect more institutional longing pushing the price higher. However, Moving back to the technical side of the market, we must identify a quite important thing. At the moment, the market is exactly at the previous daily high. And when you have a market which is testing the previous high, you never really know if the market will manage to break above it, because at any time, the market, even though it is in an uptrend, so creating higher highs and higher lows, at any time the market could create a double top, failing to break above the previous high and melting lower. That is why it is never a good idea to be looking for a long exactly at the previous high. It's always better to be looking for a long after a correction where you have higher probabilities, at least for the market to reach the previous high. Now, in this case, the market has now already reached the previous high. So we are testing and already rejecting actually exactly this previous high. So until the market will remain below this level, it can easily continue lower. So what we need is to see a potential break above this resistance. Only if the market manages to break above this resistance, at that point, this previous resistance would become support. So on the retest of this previous resistance turns support, that is where we have very high probabilities of seeing more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. So to recap, until the market remains below this level, it can continue lower. However, if we get the break on the retest, this is where we have the area where we have high probabilities of seeing institutional longing, further increasing the probabilities of a potential rejection to the upside away from this level. So if we get the break on the retest, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, potentially what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns and the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that you have the possibility to join in order to gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.